Well, folks, it's official. We finally do not have to hear any more political ads for a good amount of time. And I can say thank goodness for that. Alrighty, so it is official. It looks like Mr. Trump is going to win the election, right? So he is going to be the 47th president of the United States after being the 45th president of the United States. Now, this is changing things massively in regards to the financial markets, and I need to take you through what's going on here because a lot of people didn't really see this coming. This has definitely thrown some people off, and we need to address what is going to transpire from here in the financial markets, because this is going to move your money personally in a very substantial way. And so I'm going to run you through that. By the way, I appreciate everybody joining me as always. All I need from you guys, this is a midnight video. Smash that thumbs up button. I appreciate you all for being here. Thank you for being subscribed to the channel. Okay. Now, in terms of the election, did it surprise me? Absolutely not. If you've been watching my main channel, Financial Education, if you've been watching this channel, the Reaction channel, you know that this came as no surprise at all to me. I'd basically been calling that this election was not a close election, even though the polls said that it was a close election. I said this is not a close election, and I had even suggested that Trump was going to potentially win the popular vote. And so a lot of people called me crazy. You know, you might know stocks, Jeremy, but you don't know politics. You don't know elections. And I'm like, okay, like, I'm just telling you what I believe, like based upon all this data I look at. And sure enough, everything I had predicted in regards to the election ended up coming true in that, right? Now, major changes going on here, and you got to understand what's going to transpire from here, what stocks are likely going to do well versus other ones that aren't, and those sorts of things, right? First off, Dow futures are up 700 plus points. Now, Dow is very important when it comes to specifically the media. The media covers the Dow 30 in a substantial way. It's always the most famous index from like mainstream media covering what happened with the Dow today. And I think a lot of the reason is it's just a big point move usually too, right? Like 700 plus points, the Dow is up, in pre-market trading. If we look at the S&P 500, this matters the most significant for people's retirement funds and for people's 401ks, the S&P 500. So this one might matter the most overall to everybody. S&P 500's up almost 100 points here. Nasdaq futures, which this matters the most to the stock market and to, like, I would say most active investors and most active traders, the Nasdaq matters the most. Nasdaq's up about 300 points, a very substantial move there. The Russell 2000 is making the biggest move of the bunch. I've seen the Russell up anywhere between 3%, and I've even seen it up close to 4.5% so far here. So small cap stocks moving significantly higher. Now, something that is not moving significantly higher, something that's moving downwards substantially, is this right here. This is the volatility index, the VIX. VIX is spiking down huge. The reason being is a lot of people were convinced this was going to be a very close election. And so there was a lot of people running with assumptions that this election wasn't going to be resolved in terms of who was the winner. It wasn't going to be resolved for days, or some people were thinking weeks, literally. There was a lot of discussion I saw out there from mainstream media that was talking about this might potentially be a contested election. It might take weeks to find out who's a winner and those sorts of things, right? And it's obviously not looking like that at all. And so this makes the VIX spike down in a massive way. Now, if the VIX is spiking down in a massive way, naturally that just makes stocks go up substantially, right? People are feeling more confident out there in their decision making and less fearful in regards to the market, right? Now, you may see the Russell stocks moving such a substantial move here, right? Those stocks have been the ultimate lagger during the Biden presidency. Like the Russell's gone a whole lot of nowhere, basically, in the Biden presidency. So there's a lot of belief now that rates are going to be going down, right? The Fed's going to start lowering rates significantly. That's going to help these Russell 2000 stocks out there. There's also a belief that Trump is going to have certain policies that are going to go through that are also going to help these smaller companies, these smaller cap stocks in a substantial way. And now that Trump has been elected, there's going to be a lot of belief that the small cap stocks are going to run more, and you're going to see the Russell 2000 actually outperform the other indexes. So that is something very substantial to keep in mind there. Now, this is going even outside of small caps. You're seeing something like Bitcoin move. Why is Bitcoin moving so huge? Well, Trump's became a actually rather big fan of Bitcoin in the last, I would say, 6 to 9 months, right? And kind of moved from his kind of, not a strong opinion of Bitcoin to all of a sudden being very pro Bitcoin, right? And so now that he's won, there's a lot of excitement there. Additionally, if there's just in a risk on market in general, where small cap stocks are rolling, where volatility is going down substantially, right? Naturally, what's going to pop up huge? Bitcoin's going to pop up huge, right? So we're seeing Bitcoin make a $5,000 move. Yes, you heard me right, a $5,000 move here. Substantial. And there's a lot of people that believe Bitcoin will be going to 100,000 very, very shortly here. Additionally, if you look at its brother there, Ethereum, Ethereum's making a substantial move as well. Ethereum is not at all-time highs like Bitcoin is. Ethereum's kind of been lagging, right? And that goes into some fundamental things that I don't really want to go through in this video here today on why Ethereum's been lagging Bitcoin substantially. But Ethereum's up about 7% as well. Bitcoin Cash is up 10%. So you're really seeing all the crypto space move quite substantially. Now, stocks. We're looking at Palantir getting close to $55 now at this point in time. $55, up another 7% overnight. This stock already has a ton of excitement, a ton of euphoric feelings in it. And then you have this Trump presidency and no drama in regards to who's going to be the winner or not the winner of this election, right? And that stock's just moving substantially, now pushing close to $55. You're looking at Tesla stock up here, 12% plus. This stock is up. This is a substantial win. Obviously, Elon Musk went all in when it comes to Trump in this election, right? And there's a few reasons. Since Elon Musk has obviously made a very close relationship there with Trump, basically this sets up into a situation where I don't think Trump is as likely to take away many of the EV credits and just other credits that Tesla basically is let's just call it, they have an advantage in the marketplace, right? Is no secret in regards to that. And so that looks pretty good from Tesla. Additionally, there's a belief that Trump's going to get the Fed to lower rates substantially, much more substantially than maybe they want to, right? Which could definitely bode well for Tesla overall. And there's also a belief that Trump will not allow the Chinese auto manufacturers to assemble vehicles in Mexico and then sell those vehicles into the United States. So it takes that boogeyman out of the market as well. So you kind of eliminate several boogeymen all at the same time in regards to Tesla, right? So, and also, Tesla stock did very, very well under definitely the Trump presidency. If you look at that stock price from the time Trump took office, obviously, until the time he left office, it was it was a pretty fun ride there. And so there's a belief that there's going to be another ride in regards to Tesla stock there, right? You're looking at a stock like SoFi Technologies up about 6%. Doesn't come as a surprise. This is another one of those smaller cap type stocks, right? When in the banking space. It's not a small cap stock in general if you look at this market capitalization, but if you compare them versus other banks, this is like a little guy, right? And keep in mind, SoFi is more than a bank. It's also fintech. But these are sorts of stocks you're going to see move huge on a day like today when Trump becomes president, right? Now, I called this out on the main channel. I've been calling this out for honestly weeks and even months in regards to this kind of euphoria that could come into the market here, right? And a lot of people kind of positioned wrong in regards to the market and those sorts of things. And the latest example of this is 5 days ago. I did a video. I said no one's ready for what's going to happen in regards to the market here. The stock market's about to go nuclear, and a lot of people did not. They had a lot of fear going into this election about who was going to win and how close it was going to be and contested election, all these sorts of things, and they weren't pricing in nearly enough in regards to the small cap specifically is where I saw people just not being nearly bullish enough. And I'm kind of looking out there. I'm like, geez, like people are really going to be off sides in regards to the situation. I saw a lot of people move money to the sideline. A lot of people move money to the sideline because they believed that September and October were going to be bad months for the stock market. Why did they believe that? Well, we're in an election year, so many times September and October are bad months for the stock market. Additionally, just in general, September and October can be very troublesome months for the stock market. And so I watched a lot of people go to the sideline because they believed the market was going to downtrend, there was going to be this crash, this major correction, and they believed that they were going to be able to buy back in stocks in November at substantially cheaper prices than where they sold at in either August or September and those sorts of things, right? And so what we watched play out was completely the opposite of that. the market hit a low in early August, right, August 5th, and that was in regards to the whole carry trade situation. And since then, the market just went basically almost up in a straight line from there, right? In September was a lot of fun in the market. October was a lot of fun in the market, right? And if you've been in the market September, October, you got a chance to make some very good money. But not everybody's been there. A lot of people have been on the sideline. And you can look at something like this by even seeing not just the sentiment I look at, because I have this reaction channel, right? So what do I usually do on the reaction channel? I react to a ton of these Wall Streeters, these CNBC folks, right? That go on CNBC. They don't work for CNBC, right? They run funds. They work for these big financial institutions, right? And I watch these folks and react to them. So I'm always hearing what they're up to with their money, right? And so I'm just kind of listening like, oh, what are these guys up to here, right? Reacting to the videos. And, I get to hear this sentiment all the time about, even Tom Lee, one of the people that's seen as like a perma bull in the market, right? Even he went into September and told everybody, be very cautious, right? And he does that the very first day of September, right? Market tanks. Part of it probably was his comments going on CNBC when Tom Lee says, be scared, be cautious, those sorts of things. People go like, oh, shoot, man, Tom Lee, oh, boy. And what happened after that day? Boop, up in a straight line. So I watch even some of these bulls be like cautious on the market, and I'm just always thinking like, what's the reverse of what's everybody thinking in regards to this? What's the max pain trade, right? The max pain trade is spike the market higher big time in September and October, make everybody buy in November and December and way higher prices than they sold out at, right? And make them have to FOMO into the market. That's max pain. That is max pain. Because people are just like, damn it, man, you gotta be freaking kidding me. Like, this stock I could have bought 2 months ago 20% lower than where it's at, 30%, 40%. Like some of these moves are substantial. But you can see it in something like looking at money market funds, $6.5 trillion plus in money market funds. And here we are now with Trump becoming president, right? Likely he's going to put pressure on the Federal Reserve to get interest rates lower. I could see him putting a lot of pressure in 2025 for the Fed to get lower in rates quickly, right? And he's going to have all the ammo to use for that. Oh, our economy's bad. Biden left me a bad economy. Like, this is bad, this is bad, this is bad. We need to get rates lower. We need to make housing affordable for folks so the mortgages are affordable rate for the payments, because keep in mind, most people take out a 30-year mortgage in regards to this. So he's going to put, I think, he's going to put a lot of pressure on the Federal Reserve to lower interest rates substantially in 2025. Whether they listen to him or not, we'll see, right? And do keep in mind, there's always a potential that he could fire Jerome Powell. And that's a whole situation there. If he does end up making a decision like that, like let's say Jerome Powell's not lowering interest rates fast enough that Trump wants him to lower, Trump could always just, fire him. So that's a potential. So that's just a mess, right? And that's a mess we're going to have to deal with at some point in 2025. But the moral of the story is interest rates are likely going lower, right? Fed funds rates are likely going lower. And so with Fed funds rate likely going lower, all this money hidden out in savings accounts, CD accounts, treasuries, that money's going to have to go somewhere. It's going to have to go somewhere now, because people are going to be looking around. They're going to say, hey, man, I'm not making nearly as much, right? The easy 5%, I think that's going bye-bye. And I think that's going bye-bye for quite a while, unfortunately. Or fortunately, depending upon which way you want to look at it. But the whole, I could just park money in a treasury and make 5% plus, it's going bye-bye. And it's probably not coming back for many, many years. And so therefore, where's this money go? We got trillions upon trillions of dollars. Where does that money go? Well, now that Trump wins, keep in mind, a lot of the people that had been also bearish, a lot of them don't like the current administration, don't like the way the country's been run, right? And a lot of those folks are also Trump fans or supporters or voters and those sorts of things, right? So now Trump is about to become president again. Can you stay on the sideline with your guy becoming president? That's difficult. That's going to be very difficult for these individuals. And so it feels like they're going to probably have to FOMO into the market. They're going to probably have to FOMO into the market because they're like, our guy's in, There's a belief there, right? Just in that guy leading the country. And then rates going lower. So, I mean, you compound all these things together, and it's just like, I think it's going to be very difficult for a lot of these folks to stay on the sideline. And so then you got to ask yourself, where are they going to pile money into? Well, they can pile money into likely some of the big techs, right? Metas, Nvidias, those sorts of stocks can certainly benefit. Amazon. But additionally, I think a lot of them are going to want to play small caps. Small caps look like that's going to be the play for the next good bit of time here. And so I think the Russell 2000 type stocks are going to see a lot of momentum. And additionally, you add on the fact that, usually whenever you have a great year in the market, you have a ridiculous amount of fund managers underperforming the S&P 500 significantly. And that's usually these folks' benchmark. Some of them, their benchmark might be the Nasdaq 100, but a lot of them it's S&P 500. So usually when you have a banger year for the S&P, which has been a very good year for the S&P, you have a lot of fund managers that are essentially offsides. So now these folks are going to likely have to pile in money to try to catch up to the market. So how do you catch up to the market? Well, you can play 2x leverage things if you want to do that. You can play stocks that usually, their beta moves are much more substantial, right? And so think about stocks like Nvidia, think about even stocks like a Meta that might move much more substantially than the market in general. Think about an AMD, think about an Amazon, those sorts of stocks. And then think about the Russell 2000 and think about some of those smaller cap stocks, right? Some of those smaller cap stocks can move 20, 30% in a day. If you're playing some of those small caps, you might be able to catch back up to the market in a month or two, right? It can happen quickly if you're playing the right type of small caps, right? And so all of a sudden you can go from maybe underperforming the S&P 500 by, let's say, 500 basis points, right? 1,000 basis points. But if you're playing the right type of small caps into year end, you might be able to catch right back up to that S&P 500. Where you're like, whew, we caught back up, thank goodness, right? And then you can figure things out in 2025. So that's a potential that can play out here. But the moral of the story is there's a lot of money. There's a lot of money, and it's going to be hard to see some of that money not FOMO into the market, right? Now, what about me? Am I going to be changing anything in regards to my portfolio? Tremendous day here today, $101,000 up. We'll see what tomorrow looks like. It's very possible tomorrow could be, something close to this. Maybe it's better. I don't know. We'll see. I don't want to get too excited, but it should be another tremendous day tomorrow as well, right? So am I changing anything in regards to what I'm doing, right? Well, I did a video on the main channel 2 days ago. It's called 6 Stocks to Buy Now, November 2024, where I went into 6 stocks that I'm buying now and the opportunities in those stocks and how much upside's there and those sorts of things, right? But if you look where I'm putting money right now, I'm personally putting a lot of money into a lot of the value and dividend stocks. Small cap stocks, I'm already positioned to those. I already got ahead of that, right? Because small cap stocks have already started their run. I'll pull it up for you. I'll show you right now. I'll pull it up real time for you guys so you can see. The small cap move has already started. So if people are just getting on the small cap move now, there's going to be money to be made there, but I'm just telling you they're already late to the game. And that, once again, that doesn't mean they can't make a lot of money, because they can. It's just they're certainly late to the game in regards to this. So if we go ahead and pull up a year to date of the Nasdaq, right? Of the Russell. The Russell's already started to move. The move started in August, right? The first week of August, that move already started. You had a Russell that was right around 2,000 at that particular time, and we're already going to be pushing up to 2,300 plus on the Russell. So the Russell's moves already started. There's likely a lot more money to be made in this Russell move over the next bit of time, but the move already started, right? So I'm already positioned into a lot of the small caps I need to be positioned into. So now where I'm positioning is a lot of the value and dividend names. Why am I positioned into a lot of these value and dividend names? Well, many of them are trading at 3-year, 5-year, 7-year, 10-year lows right now. Additionally, these are the exact sort of stocks you want to be positioning into, given that you're likely going through a cut cycle, right? Additionally, if there's a belief that the consumer gets in a stronger place over the next 1 to 2 years than they've been in the last 1 to 2 years, these are exactly the sort of companies that will benefit the most from that, right? They're going to benefit substantially. Many of these companies are global companies. Maybe many of them have massive businesses, and many of them have been hurt substantially by the middle class being hurt substantially from inflation over the last few years. And so if you're talking about, if you have the belief that the consumer is going to be in a little better spot over this next couple of years, those companies, their revenues are going to go up substantially. Additionally, many of those companies have had major cost-cutting measures going through in 2024 because their businesses have been in a rough place. So you have massive cost-cutting measures, right? And then if you start to talk about revenue starting to come back in 2025 and 2026, the margins and the profitability profile of these companies is going to go up substantially quick. And then if additionally you're going into a cut cycle, right, then also people start looking at some of those stocks, especially the ones that pay dividends specifically, because they say, oh, I can't get my 5% anymore. I can't get my 4.5%. So they start looking at dividend stocks. And they start saying, oh, I can get a 3.5% dividend yield over here. Okay, I like that, right? So additionally, those are the sorts of stocks I also want to position into, because at some point we'll have that big unemployment recession. I don't know exactly when that is, but that's going to be coming down the road. And those are the sorts of companies you want to be positioned into whenever we have to deal with that down the road, right? So I love buying these value and dividend names right now. And I think they are just the best value imaginable for this next, month or two. And keep in mind, some of these will still see tax loss harvesting. So you might see big upside moves here, and then you might still see random big downside moves, because a lot of those stocks are tax loss harvesting candidates, because many of those stocks are down, 20%, 30%, 40% for the year. And keep in mind, there's a lot of stocks that are up substantially this year. So if you're trying to offset gains, you don't have a lot of stocks to play with in regards to selling off. So if it's a Celsius, and then you sell off Celsius. If it's a Nike, if it's an Estee Lauder, if it's a Wynn Resorts, whatever it is. If you have that opportunity, you sell out of that, right? You take the L there and you offset that against gains, and then you worry about buying those stocks back in the first quarter of 2025. So that's something to keep in mind there. But once again, I did a video that on some of the best opportunities I see in the market right now. I did that video a couple days ago, right? I think you're going to see a lot of these sorts of stocks move. The planets and the Vons, that's going to be interesting because of certain things that didn't go the way certain folks wanted it to go in regards to that particular product, specifically in Florida. So I don't know how that's going to be taken from kind of Planet's angle there, but you're going to see a lot of these type of stocks move big. Fubo, right? Honest. I think Honest is getting out of the gulag very soon here. If Carly comes through with the good earnings, we're going out of the gulag. The gulag is under $5. I'm telling you, between this momentum in small caps, and then if Carla comes in next week and has a great earnings and a good guidance, we're out of the gulag, and I don't think we're ever coming back in regards to Honest. So hoping for the best there, right? Now, SoFi, I think that's another one that continues to move huge. Revolve, this is a small cap e-commerce company I own, that I've owned for quite some time. It's a great company, does phenomenal job running that business over there, even in a tough consumer environment. So Revolve, I think that's a stock that moves big. I think Celsius, after you get through tax loss harvesting here over the next month or two, I think that one's set up for a nice move to the upside. Stocks like Cheesecake Factory, another perfect example. Let me get this right with Cheesecake Factory, right? Talk about a perfect position stock. You got a growth story emerging there. People are finally starting to understand with North Italian flower child concepts, right? For cheap PE, it's a big dividend payer, and people are going to be starting to look for yield extensively over this next year, right? And so they're going to be looking, and they're going to say, where are the yield in stocks? Oh, there's that Cheesecake Factory stock. That's yielding big, right? Additionally, you're going into a cut environment from the Fed, which means, the cost of doing business is going to go down substantially when it comes to taking out any debt to build new restaurants and everything that goes into that. So that's phenomenal. If Cheesecake has to refinance any debt, that's much better to do it at much lower rates than higher rates, right? So Cheesecake's just such a name that's set up so phenomenal that if that stock was $80 in not too distant in the future, I wouldn't be surprised at all. Just to be quite frank, the company is so well positioned. So these are the sorts of companies I think are going to move huge. Now, on the flip side, you're looking at treasuries spiking, right? You're looking at those yields going actually higher here. People are like, what the heck's going on? And the belief there is, if there's inflation, there's a belief that the Fed won't be able to lower as quickly, right? Which means higher treasury yields. Or there's also fear, like, what if the Fed has to start raising rates again, let's say a year from now or 2 years from now or something like that, because Trump does a bunch of tariffs, and then those tariffs cost the consumer a bunch of money, and you just get into another wage price spiral and those sorts of things. So there's all like sorts of worries about that. Some of those might be unfounded, some of them might be something to it, but at the end of the day, there's just worries there. And so that causes treasuries to go higher, which typically you would usually see treasuries go higher and then stocks go down. That's not the situation. We got a little different dynamic going on. But since treasuries are going higher, this also means this rally in mortgage rates could continue on here for the next short bit of time. And that's not good for the housing market specifically. If mortgage rates continue to climb here, no bueno. No bueno in regards to that. So that's just something to keep in mind there. So like my Toll Brothers put options there, I don't, even though the market's going very risk on, it's clear as day, right? I don't feel necessarily the need to get out of those Toll Brother puts, because at the end of the day, seeing what's going on with mortgage rates, just because Trump's president today, I don't know if everybody's going to go buy a $1.5 million Toll Brothers house tomorrow. Like, that might benefit Toll over the next, many years, but in the short term, just because Trump's president now, like I said, it doesn't mean everybody's going to run out and buy a Toll Brothers house tomorrow, okay? And say, oh gosh, like Trump won the election, okay? Let me go buy $1 million house from Toll Brothers. Let's go build it. Like, that's not the way this works, right? There's a whole lag effect there. So I don't feel like I need to run out of that one, even if the market goes super risk on in the short term and I lose some capital there. And I wouldn't mind adding a little bit more to this particular Toll Brothers put position there. It's a great hedge for my portfolio, just in case we get any real downside here. Now, the other thing I want to mention here is make sure you guys are focusing on the long term. There's going to be a lot of moving parts here in the short term. Obviously, we're going to have a change of presidency in January. That's going to be a whole thing to take but at the end of the day, presidents come and go, right? Policies help some, hurt some, but they don't have nearly as big of an impact as you think they have. And so, especially in any sort of short-term time period, and when I say short-term time period, I'm talking over a 1-2 year span. In regards to an economic policy, 1 to 2 years is extremely short-term. If you're talking about 5, 10, 15 years, that's a whole different ball game there. But if you are of the belief that Trump's going to get into the office and he's going to do well, right? And he's going to do much better than Biden when it comes to the economy, when it comes to companies' earnings, all those sorts of things. He's going to help things out and change a lot and bring down regulation, help with taxes, all those sorts of things. Okay. It takes time to do that. It doesn't happen overnight. You're not going to really feel any upside from any Trump policies that might be better. You're not going to really feel any upside likely until you get to 2026. So that's an important thing to remember. So don't get too caught up into the short-term feeling of like FOMO or any of those sorts of things. Stay focused on what you're doing. So like for me, I'm going to stick to buying these great growth and value companies that have tremendous long-term futures, right? Even though maybe in the short term the play is just leverage out against the Russell, right? And try to buy something that's a 2x leverage on the Russell or 3x leverage on the Russell or something like that. No, I'm not interested in trying to play these short-term games. I've built a great fortune by focusing on the long term and letting the short term be what the short term is going to be. And so that's kind of my standpoint in regards to this. Don't get too caught up in all this short term stuff, because there's going to be a lot of stuff happening. There's probably going to be a lot of excitement. There might even be some euphoria that comes in this market, right? Like I said, check out that video I did for you guys, 5 days ago or so about, the stock market is about to go nuclear. I think that's a video that can help you out immensely, but really, really focus on the long term in regards to this, guys, okay? Alrighty, I appreciate you joining me as always. If you're looking to access my premium courses to learn everything I got up here that I've learned over the last 16 years, plus be part of my private community, then you can click the pinned comment down there, fill out an application. We'll see if we can get you access to that, maybe at the end of this week or next week or something like that. Alrighty, guys, make some money out there. Much love and have a great day.